Welcome. This is the Trading Pit, your market update for sophisticated crypto traders. It's February 13th, and here in the studio is JJ and Benjamin of J Labs, and I am, of course, Marconi White. Well, today's top crypto news comes from actually yesterday, where Bitcoin broke above 50,000 for the first time since 2022, driven by continued strong ETF inflows. And this morning, we see an article from CoinDesk. Bitcoin traders scoop up options bets at 65K and higher. Kelly Greer, head of America Sales Galaxy, is quoted as saying, "We've seen flows in at 50K, 60K, and 75K calls in the listed options market from April to June maturities." Wow. JJ, is the market positioned to see a return to all-time high by this summer?
It's certainly looking like it now. So what we discussed last week is just how cheap the volatility levels were on Bitcoin. So if we look at this chart here, which tracks Bitcoin's implied volatility index, we just see the massive run up that's had in the past few days. So good things don't stay cheap forever. It seems like people bought up a lot of that out of the money volatility, and that really drove this higher over the past few days, especially as those spot inflows came to the ETFs. We saw a really big bullish impulse to the upside. Now it looks like we're in for a little bit of turbulence here in the short term. So I'm sure we'll get into all that. But for now, yeah, it does look like the market's starting to take bigger bets on higher prices in the second half of 2024.
You know, after going through the bear market, the idea that we would hit all-time highs this summer is truly amazing.
It's a lot. I don't know if I'm a believer in that. I think probably later in the year. I'm not so sold on it, just a straight teleport to new all-time highs from here. But it's definitely coming, and I think we're starting to see the options market price that in, as well as these ETFs like we were discussing last week. It's just this persistent price insensitive flow, right? They just want exposure to Bitcoin. They're not looking at technical levels, liquidation pools, any of the metrics that we obsess about. It's a different kind of entrant here that's just buying and holding it for the foreseeable future. They don't care. So that's a good thing.
Well, Benjamin, speaking of the ETF flows, we've continued to see the outflows from GBTC, but they've dropped week over week from 2.2 billion to 927 million, so just under $1 billion. And importantly, overall inflows remain super strong. This is according to Eric Balkunas. Hopefully I'm saying his name correctly. The net cumulative flows for the 10 Bitcoin ETFs, including GBTC, has doubled in the past 3 days to over 3 billion. And just to give you some context, it took gold nearly 2 years to get to this point. So the question I have for you is this just more evidence that the Bitcoin ETF, the adoption of it is going to take less than a year? We're going to see the adoption happen in 6 months or less?
Yes, I think it will still take 6 to 9 months, but the expectation is that currently it was around $2 to $3 billion of inflows into these 9 ETFs, right? It's expected that by the end of the year, we hit the $30 billion mark. This is what I hear from a few of the market makers who are working on the ETF side of flows in order to provide hedging facilities and prime brokerages and OTC desks who operate in that space. This is their outlook. This was, in fact, their outlook before ETF launched. And this was a very optimistic outlook they had, apparently. And they did not expect that the pace would be this good. So apparently, if the space keeps up, even if it slows down for a while, they think that, $30 billion would be the mark that will be reached this year. And if that is the case, if 2 billion could do this damage to the market, imagine what another 28 billion will do. This is irrespective of what happens with GBTC, all right? Maybe the GBTC outflows simply stop as the gap of arbitraging between the other ETFs and GBTC calms down. So that's a high probability trade everybody is looking at as well, that the gap basically slows down and there's right now not much incentive to simply sell out and move to another ETF just for the sake of not paying those 1% or 1.5% fees. So there's certainly a great adoption, or however you could call it as, but basically it's flows. It's USD basically coming in. APAC has been on a vacation for nearly a month now because of Chinese New Year and so on. Almost all of top traders who I could talk to who have been on vacation have been feeling bad about missing out this rally. So it's very clear that APAC is going to come back and try to get into this market as well. Yeah.
Well, I want to touch on that. So what I'm hearing is from the insiders, the market makers, we're hitting most likely their most optimistic forecast for what the ETF could do, which is absolutely incredible, right? This was not known before the ETF was launched, right? The various forecasts. Now we're talking about other markets coming online that haven't even really been here for this market, which is truly astounding. There are some headwinds. We're going to get into that as we start talking about the Dixie. Before we do that, I do want to ask you, what does this do in terms of updating your perception of what could happen for the Ethereum ETF that looks like it will be approved later this year?
So when it comes to Ethereum ETF, I think there is a little bit of pullback from even those who are applying for an approval. So the narrative we are seeing, we also saw what ARK did recently when they pulled out of the ETF race, and they're trying to bring in the staking narrative into this. The reason I think they're trying to do is because it's a much better narrative to sell an ETH ETF, which has some potential yield capabilities to ETH 2.0 on staking and restaking narratives, wherein you have an additional yield, right? ETH is right now the only yield generating asset if you look at it in that manner, in crypto at least. Whereas Bitcoin doesn't have one such opportunity. So I think we also saw Franklin Templeton do a similar move yesterday. So by that logic, we need to wait and see how many more of these guys basically flip their applications to an opportunity where they are able to include staking yields in one way or other, or permissions to able to take some of those ETHs that they're buying and stake it. We need to wait and see what type of application amendments happen. So by default, if there's no more amendments or nothing else, maybe by May or September we could see a change in this. But if there's going to be amendments, we need to wait and see how these applications will take shape at that point.
So the market and market participants, retail, really shouldn't telegraph what we're seeing right now with BTC onto an Ethereum. Although I think, JJ, would you still argue it's a pretty bullish bet for Ethereum, something you could be looking at right now?
Yeah, long term. I mean, I think we all know what's going to happen. Like, you have such a limited supply of ETH, and then you add in this new wave of demand that'll come with the ETF. If you look at it over the course of a year, 2 years, it's just going to go to infinity. But in terms of the short term, that's a gamble on what happens week to week, month to month. But if you keep that long term perspective, I think this is probably like the inflows we're seeing with BTC. If everything looks the same as we get into the ETH ETF, there's no reason to believe it'll be any different. Like, the same sales forces from BlackRock, Fidelity, et cetera, are going to be shilling the ETH ETF next. Like, how much money they're making over the past month alone on these BTC ETFs, it's just become too lucrative of business for them not to go out and sell it.
We know that they can't leave good money on the streets, right? Yep. If it's out there, they're going to hunt it down.
Especially if you think of how much institutions like things like yield. Like, ETH is literally the perfect product for them to go out and market. So it'll be a beautiful thing when it takes shape.
So long term, it's a good play. Don't telegraph existing results for Bitcoin right now to Ethereum. And as Benjamin just noted, we need to continue to look at these amendments to see how staking yield will be applied to them. But as you said, long term, if you're really trying to get a position, this is as good a time as any. If you're going to be in here for the 5 to 10 years. Okay, let's move on, because I want to talk Dixie, because we had a CPI report that came out this morning. But before we do, if you've joined us, hit the like and subscribe button. Give us a little bit of love. We want to know that you're out there. And if you want to, you can always share this the show. We're on every Tuesday and Thursday, same time, live, so we can be talking to you guys and give our market perspective. Share it with anybody. Twitter, Reddit, your text storms, wherever you share this information, get it out to as many people as possible. Okay. Well, as I just noted with the Dixie, the ETFs may be hot, but it's not the only thing that is hot, because according to Ted Macro, the US CPI data came in hotter than anticipated. This is on X. It was 3.1% year over year versus 2.9% expected. Everyone was looking at this coming down. This was supposed to be the catalyst for the Fed to be able to lower rates. Now the market is expecting less than 4 rate cuts this year. JJ, let's unpack the Dixie just from a pure price perspective. We don't have Ben Lilly here to get into the yields and talking about all the market perception, but just from a Dixie perspective, what does that look like for risk assets, and what does that mean for Bitcoin if potentially we don't get those rate cuts this year?
Yeah, bad news never has good timing, right? So
yeah,
we're right at that crucial 50K resistance level this morning. The hot CPI print came in. DXY had been in like a mini downtrend. You see this here over the past week. As we discussed, like after they unleashed that treasury announcement in terms of what hedge funds can do with their balance sheets, taking advantage of the treasuries, DXY dropped a bit. And then the CPI print just sent it right back up to new highs. And it's really breaking out across time frames here. So you see like it's about to flip all of this bearish technicals here. It's about to go green. Looks like there's a lot of upside left here. If we look at our DXY risk rating, we see the whole way up from 42K, gave us a neutral signal, which is kind of after it's been bearish, you can give you risk on insight there. So went up and now it hasn't registered yet, but this is going to be looking red by the end of the day, which is strong risk off. And we basically see Bitcoin behaving in lockstep with it. So like we said, as soon as that print came out, Bitcoin just reversed straight back to, I think it was closer to 48 a few minutes ago. It's bouncing now, but we'll have to see what it does throughout the course of this trading day. If we look here, if we overlay DXY on top of BTC, right, we see that DXY made that top last week. And basically when it reversed, Bitcoin went up. Now we see DXY reversing and Bitcoin's going down. So definitely not what you want to see if you've been long risk here. It's probably not a bad time to take some of those profits off the table, as 50K is going to be some harsh resistance that we're running up against.
You just mentioned 50K being harsh resistance for Bitcoin, but let's just look at Dixie price. We've talked several times in this show about it running super hot, really breaking above the 105 level, maybe going all the way to 107. Knowing now that the market anticipation is going to change for the rate cuts, what do you think is the odds that we start to see a really strong Dixie move forward?
I mean, the market's not priced for this at all. You look at the S&P 500, stocks like NVIDIA, right, which has basically doubled in a month after tripling last year, whatever it was. Like the appetite for risk has been so off the charts that the market's not prepared for a scenario where the Dixie really gets a full head of steam. And look at this. You tell me where the resistance is on this chart, because I don't really see it. So, I mean, I think there's a lot of people potentially off sides here that were betting on lower rates in 2024. What happens next? You know, it's all speculation on what the Fed will actually do. Do they just leave rates high forever? Do they cut due to, you know, the interest on the national debt and these other external factors? Remains to be seen. But if the narrative becomes that you're underexposed to DXY and it starts to run, there's a whole lot of risk priced into markets right now that people are going to find themselves in a world of pain if it keeps going higher from here. So be prepared.
I do think so much of the market is anticipating those rate cuts because they know the pressure that the markets, different aspects of the markets will be under. So example, yesterday I was reading an article, headline was about $1 trillion in assets for commercial real estate were going to have to be rewritten this year. So either refinanced or sold off. And all those assets are sitting on banks, a lot of smaller banks. And that underwrote, and that was being used as leverage for about $4 trillion in loans. And my thinking here is that everyone's just really trying to wait to see who's going to call the bluff. Is the Fed going to wait until something breaks? Have they done enough? And are they close enough to that CPI 2%? What's your perspective there? Do you have any view?
The only thing I know is that there's a whole lot more debt in existence than there are dollars, right? And that's kind of the dynamic that I think we see playing out with Dixie right now. And commercial real estate's a good example of that. So similar to 2008, on their balance sheet, they may say, hey, we have $20 trillion, et cetera, lever it up. But if they actually had to sell those assets, those commercial real estate assets, how much money can they actually get from that, right? A whole lot less than the debt they actually owe. Yeah. That seems to be the perspective, right? So there's this massive imbalance between what's written down on their balance sheet and how much they could actually access if they were forced to sell. And I think what we saw with like New York City Bank a couple of weeks ago, all these warning signs are popping up, and risk is not priced for it at all. So eventually we know the Fed will step in. Like that's their duty to step in and prevent these disasters from happening. But what level does that happen at? And what do risk assets look like when that actually happens? You're taking a pretty big gamble if you're trying to front run Fed pivot in that direction, front run kind of a forced liquidity injection. So there'll be signs, like you'll see a strong top from DXY before any kind of emergency liquidity comes in like that. And we don't see it yet. So
well, that may just be the play of the year. We talked about a couple of episodes. If you're interested in what that sounds like, definitely check that out. That could be the fattest pitch of 2024. So
Yep.
Dixie remains a real risk to risk on assets. We really got to see how the market digests this current CPI print, what we start to expect in terms of rate reductions this year. And then, of course, obviously, as we get into the next, I would say the rest of this quarter, we're going to be looking to see what happens as they allow the reverse repo to run dry. We know we have new dealers. Again, a lot of information there we'll unpack. We got Ben Lilly coming back this Thursday, same time every week. So be sure to check that in because he's going to be giving us some additional insights there. All right, let's move over to BTC. This is a crypto show after all. So we started the show talking a little bit about that options positioning. Obviously, we've seen a bit of a pullback this morning as the market has started to digest the CPI print. What do you think those options are saying? Are the dealers, are the people that are making those bets, is that really just trying to sell some cheap volatility, expecting it never to be realized? Or are these people just trying to get in early?
Well, they were buying up the volatility. So as we were discussing last week, like these implied volatility levels were extremely low, right? Like we saw the huge run up pre-ETF, and then they fade it back down to absurdly cheap levels relative to the move that Bitcoin can make given these new ETF flows and whatnot. So we saw a quick impulse of just upside buying and call options and whatnot, and that just accentuated the squeeze that was happening due to the spot volumes that were coming in from these ETFs. So we saw, like, here's a good example. The February 16th expiry, which is this Friday, since February 8th, we saw over 10,000 call options open, basically just in this one expiry alone.
For the audience here, can you break down what we're looking at on this chart?
Yeah, so this just shows net call versus net put positioning for the February 16th expiry, which is this Friday. So how many open call positions are there? That's in the green here. How many open put positions are there? That's the red. So we just saw like people outright buying this volatility level into the end of this week. April 26th is another big one. So this potential halving play, we saw it run up from 9K calls of open interest last week to over 15,000 at present. And it's been consistent across the board. Like we showed that term structure chart, pull that up, and just how cheap it was across all expiries. And this was basically post ETF. The curve structure just went down, which meant that the market wasn't priced for high volatility in the future. It just expected price to range as all those GBT flows were expunged from the market and whatnot. And now we just see it rising. So I think last week we pointed out that we were at I think February was around 30 implied volatility score and March was at 42. And now you just see how steep this has gotten. So it's gone basically up over 25% in just a few days here. And it's pretty consistent across the board. So just outright buying of long dated volatility, which is sending this higher. And just that increased options demand, as you see more demand for options, the term structure will rise along with it. And that's the implied volatility level, which means that your cost for buying contracts is more, if that makes sense. So what might have costed you a few $100 last week might cost you a couple thousand now.
I do want to get into talk a little bit about options and get a little bit into your latest options video. Before I do that, Benjamin, I want to ask you, you talked about the contacts that you have, maybe some of the market makers that are sitting in Asia. Are they looking at getting greater exposure to some of this volatility? And you mentioned that they were realizing that they missed out on this latest run. Do you have any perspective there from on the ground talking to some of those participants?
Yes, everybody's trying to get back into allocations. So it's like everyone is hoping there will be a solid pullback. This is the case. So,
well, when everyone's hoping for a solid pullback, isn't that the timing where it doesn't happen?
Yeah, it is possible. I mean, look at it, right? We're seeing a pullback right now, and look at the buying as such. It's quite crazy. So we have to, and this is exactly happening when the cash market opened up, right? So typically, you can say this is start of inflows, basically buying up. You're seeing a Coinbase premium. Yeah, so we have to wait and see how this plays out. Basically, we are still in the Monday range, and we have to see.
The New York session's been relentless with the bidding, so it's definitely something to keep an eye on today. Like if this continues, just forget about DXY for a bit because, like we said, price insensitive buyers, right? Like they don't care. They just want exposure to this thing at any level, basically. So,
well, yeah. So maybe that's another perspective to get here, Benjamin. You talked about everyone asking to, hoping to see a pullback. I think a significant one. We've talked on this show about a 30% pullback, kind of a liquidity event. If they're waiting for that, they may not be happening for some time. Are they going to become less price sensitive and really start adding fuel to this demand fire?
Yes, it is possible.
Yes. Okay.
It is possible.
They're adding gasoline to this fire, I see. Okay. All right. Well, okay. I want to get into a little bit into the perps because you just broke down the options view, which I think is, again, adding a lot to this bullish narrative, which outside of the Dixie and the CPI running hot, everything is just going full bore on the bull side. So for all those who are interested more in knowing options, I do have to do a little bit of a plug. JJ just released a video last week on how to trade options as we start to move into the halving. It looks at some of the volatility that he talked about today, how to be finding some of that cheap volatility versus paying a premium for it, and how to think about trading. And it's on this channel. Definitely go check it out. It gives you a better understanding of some of the terms and, more importantly, some of the strategies. And if you're interested in actually trying this out, this is the time to do it. Go open an account on CoinCall. There's a link in the description below. CoinCall is a great place to be trading perps, options, and futures across all the major assets. And we've done it several times in the show. We'll do it again. We can see a view into what the actual interface looks like, but they have competitive fees and they have a great interface to work with. So it's an excellent place to start that options journey. So definitely go check that out. And as we've said before, today is the time to start doing those paper trades, start dipping your toe and doing some of the smaller trades so you can get prepared for when that fat pitch, the liquidity event that Benjamin just referred to, is at your front door. You're able to take the right steps. You're not going to be able to do that unless you have some practice. So go ahead and do it today. But with that, let's move into perps. So just before the show, I pulled up some of the data. Perps are sitting at about 13.8 billion. This is according to Coin Analyze. What's interesting here, they've gone up about 4.7% over the last 24 hours, but shorts are now they're now a larger percentage than long. So JJ, break that down. Are we going to start seeing some more liquidity to the upside? Is just going to add just more fuel to the fire?
I mean, it's been that cash and carry trade. That's kind of my biggest read on this situation, is how popular that's become. And you see that here, like that. I believe that's a large reason why this has gone negative, is that you have a whole lot of people buying spot. And how are they hedging it? They're hedging it with perps, right? Which is typically a very bullish structure. That's what you want to see, is people buying spot and selling the derivatives. So there is, and anytime we've hit this level, I pointed this out on Twitter yesterday, is that anytime we're near like this 0.1 or 1 ratio of longs to shorts in terms of derivatives, that's typically when we've seen the biggest price movements. So we saw it back in June, right? This ratio was falling, and then we got that big leg up. We saw it again in October, ratio drops down, price moves up. Saw it again in January, ratio moves down, price moves up. So there's not really like a huge amount of froth in this. It's a lot of hedging. They're like, yes, the open interest level is elevated, but it's important to understand why it's elevated, right? And a lot of that is people, one, cash and carrying spot, and two, if we go back to the options market, we see how much open interest there is at this 50K strike across expirations, right? So that means that there's a substantial amount of dealers that are short this strike. So if price moves above $50,000, that's when they start losing money. One way they hedge that is they long the derivatives. So yes, they have long derivative exposure, but they're also short the option. So it offsets itself. So I think we're like the moves in the derivative market and what we see in true open interest, like how high this has spiked. Basically since January 31st, it's up from 2.13 billion to at present over 3 billion. of open interest. And I think a lot of that is just pure hedging. It's not necessarily people out there gambling on perps the way we typically see it. Like, yes, there is some froth and FOMO, especially if we get over 50K, but it's not, this isn't $1 billion of pure directional betting. Does that make sense?
It does. It's a very sophisticated breakdown of how the market and participants are using these products. Very, as you said, very different from what we've seen historically, which I think is more about longing or shorting with max leverage to try and capture a single event. This is actually using these as they're intended, right? As risk management tools.
Yeah, absolutely. The institutional presence in there, it's definitely noticeable, especially since the ETF became live. I think we're just seeing the maturity of these products now. But that said, there's still people gambling on places like Bybit and whatnot, and they'll get liquidated eventually. So it's not purely institutional use, but I think that's been the primary use case this year.
Absolutely. I want to bring in a comment here from Reg Domain. He says, the issue here is that smart bulls are seeing price at the 0.618 to 0.65 top to bottom retrace. This is the area to take off long exposure and begin opening short exposure. I think that I'm guessing the 0.61 to 0.65 is a Fibonacci level that he's referencing there. But is that what you were just talking about, JJ, in terms of moving and hedging that the market's doing?
I mean, it's just this is a resistance level across many different ways to look at it. So I don't use Fibonacci personally, but if I look at the Bollinger Band here on the weekly chart, I could see that it's hitting into that, right? So this means that you're basically betting on an expansion, which it's a pretty rare event for price just to accelerate beyond the Bollinger Band on the weekly chart. So like you see how rare it is. Basically, the last time we saw that continue was late 2020 into 2021. So are we there yet? Maybe. But I don't know. It's not worth gambling, right? So if you've been long from, say, the low 40,000s, this is a logical spot to take profit. And like, again, we go back to this, the options open interest, this 50K strike. If these people are hedged with spot, and I think what we saw some of this yesterday is as price move beyond the strikes that they sold, they have to sell spot to hedge that, right? Like you close out your position, and that's how you do it. You sell the spot you're holding and you buy back the call. And basically you just take whatever profit remained from that trade because you were long spot the way up and you close it out. And I think that it's just a natural spot for profit taking here. So how the market reacts due to this kind of mini pullback that we've seen this morning, it'll be telling. If we just go right back over 50K, I mean, you can't fight that flow. The bid's just too relentless. So we'll have to see how it plays out. But yeah, I think your average traders, right? Like people that are just looking at this from a level to level basis, 48 to 50K was the take profit spot, right? Like if you were looking at it at 42K, 44, etc., you have to take profit at some point, and you're not just going to hold it forever on a gamble that just races to all-time highs. So logical spot for traders to take profit, and we have to see what the investors are going to do in terms of the ETF flows here.
Benjamin, sorry, okay, we have a lot of Bens that work at the exchanging goods, so we try to divide them up. I don't always do the best job. Benjamin, what's the point? What's the price at which the market participants you're talking about just capitulate and start buying spot? I want to go back to this notion of them becoming less price sensitive. If we continue to see this inflows coming in at the ETF level, showing that we're less price sensitive, right? Even at these elevated levels compared to what we've seen. Obviously, as we mentioned at the top of the show, Bitcoin hasn't been here since 2022. If we start to see this go above 50K, stay above 50K for an extended period of time, are the market participants going to just capitulate at some point and start buying in?
Yes. Give a weekly close above 50K and you will find massive amount of buying in the APAC time zone. It's coming if that happens.
If we get the close on a weekly above 50K.
Yeah. If that happens, then yes, there's a lot of sideline money sitting there. And past days, I've been having a lot of conversations with a lot of these guys. And yeah, everybody are bloody hurt about how they've missed out on this rally. A lot of them positioned after the ETF drop. They cashed out a lot on their spot holdings. We also thought that would be the case, that it is going to consolidate a bit longer, sideways a bit longer. Certainly did not expect a V-shaped recovery, to be honest. And that shows how much of dark pools and non-transparent transactional flow is coming into this market, that sooner or later it is going to be difficult to just say based on how our order flows look like and say, okay, the balls are looking great, good bids, so let's go to the moon, or we have good asks in the short-term zone, price zone, so we are going to correct really hard. That's not going to be the terms very soon. It's going to be more based on what is happening on the Coinbase premiums. It is going to be more based on what's happening in the Gemini premiums, where there are flows happening around how much money is moving into and out of Coinbase Prime. What other information are you able to source from some of these market makers? It's going to get a lot more non-transparent sooner or later, just the way TradeFi has been. This has become inevitable, and this is also reflecting in what's been happening for the past 1 week. I mean, if you just look at the chart I've been showing around, and you see this vertical black line. Basically, that's where we started the flip of all the resistances around 43K and started running. And yeah, you can very well see that the red zone basically in perp spot basis is the Coinbase premium. It goes into red and it goes into premium. So it's purely the Coinbase premium which has been driving this entire price action for the past 1 week. That's because of the USD flows that's coming in. That's what some of these guys are saying when I spoke to them. It's actual USD. It's not about BTC recirculating and getting parked into an ETF vehicle like I thought. I was proved wrong when I spoke to these guys. It's actually USD coming in. It's not USDT. It's nothing. Because if you look at USDT market cap, it went up not more than $2 billion in the past 1 month. Majority of buying happened in the first 3 weeks of, majority of minting of USDT happened in the first 3 weeks of January. After that, it had been quite silent. So it's got nothing to do with USDT. It got everything to do with USD. So
Okay.
There's been some real flows into the dark pools and OTC buying, and
this just reinforces. Yeah, it just reinforces the narrative that this is real buying. This is real accumulation happening right now through these ETFs. The long-awaited wait until TradFi shows up. It's actually happening, and as we're seeing right now, it's really taking place in front of our eyes. And we've been waiting for years for this to happen, and that's what's unfolding.
So the other theory that I'm told by some of these guys who are well-versed in the ETF space is that every ETF, when it launches, it gets a bit of a FOMO. It takes a bit of time for the marketing. It takes a bit of time for the flows to start coming in and settle down, and then a local top is reached. The thing with BTC is that apparently a lot of people expected, including a lot of those who were servicing the sector, expected that the top will be reached somewhere around $2 to $3 billion. And the way things have been going in the past 10 days with respect to flows, they say the top is not in on that flows. So it may slow down a little, it may, go a bit wavery, but their theory is that, or the expectation is that the ETFs are like, it's like a newly listed token on Uniswap. There is enough liquidity coming in. So as long as you keep adding liquidity into it and nobody pulls out the liquidity, that contract basically keeps propping up because there is still overflowing demand one way or other that keeps coming in, like a few hundred millions every day, and it keeps running. That is basically what is happening over there. So until that short-term top is reached, it's like, okay, this is a short-term top with respect to the inflows. Now we have to wait and see from where we'll get more and more demand. Until that happens, nobody wants to even call that this is a top for the ETF inflows. The slowdown is not what they are willing to call it as a top.
So you heard it here. You need to be tracking the flows more than the price to really understand the near-term topping out before the market perhaps has a liquidity event or perhaps some consolidation, maybe some better buying points. Okay, I want to move on to the last part of the show where we can talk a little bit about positioning, a little bit about trading, because what we have questions here in the chat, a little bit about what are people going to do from an alt perspective? What are they looking at from Ethereum, perhaps further down the risk curve? And so I want to get into that. JJ, we'll start going over the Degen trade on CoinCall. But before I do that, I just want to point out, thanks for everyone for being here today. Love having you here. Welcome, welcome. If you haven't already, hit the like button, hit the subscribe button, and share this with as many people as you think would like to hear a sophisticated breakdown of the market every Tuesday and Thursday. And certainly as the market heats up, we may even be here every day. We'll have to see. We'd love to hear if you think that'd be interesting. And if you haven't already, I'm telling you now, this is the best time to get into options and start learning how they work. JJ has put out many videos. His latest is an absolute banger. If you want to understand strategies of how to think to find inexpensive volatility, when to sell it, when to buy it. So that's here. And you can use the ref link in the description below to sign up to Coin Call and start trading those options. Get some practice now before the big opportunities hit. Okay, JJ, let's look at that trade. And then Benjamin, I'm going to come back to you. I want to talk a little bit about how the market's going to position as we wrap this up. So JJ, you want to go over the trade you opened a couple of weeks ago, take a look at it and see how it's performed?
Yeah, this has been insane, huh? So last week we were talking about as Bitcoin was at 43,000, we were saying it was kind of forming a base around the 50-day moving average, which was going to be critical. And I was expecting to move to like 46. It kind of for my expectations there, but we were saying just do a what's called a strangle, which is where you buy an out of the money put contract and an out of the money call contract. We said the February 22nd date was good for that because of volatility levels.
There we go. Okay, sorry, no, we had a little bit of a production issue. All right, please continue.
When the volatility levels were as cheap as they were last week, the odds are in your favor of some kind of mean reversion there in terms of volatility, which we saw this week, right? Like we had that parabolic run up, and these contracts that we bought for a couple $100 last week are now trading at over 4,000. They expire next Friday, so probably a good time to take some profit here if you haven't already. And in terms of looking at things now, it's just I think it's too frothy to take a gamble on the upside from here. I'd like to see like you look at these premiums, right? So even if you go deeper out of the money, like things over 50,000 are trading for like $51,000 strike is trading for like 800. That's just, I think that's too much premium in too short amount of time. Not to say Bitcoin can't go up that much, but the odds aren't in your favor. What you want to do when you're looking at options is look for contracts that are cheap in proportion to the size of the move Bitcoin could make. So that's what we did last week. And I think this is probably as good a time as any to sit on your hands. If you had to enter a position, right? I would probably look at
no one has to.
Yeah,
there's no weapons being put at your head or your neck.
Yeah. But the beautiful thing about these move up is that the skew, which is the amount you're paying for put contracts relative to call contracts, has gone negative for the first time since November. So that means you can buy out of the money puts for extremely cheap here. And this is just some insurance. So if you're holding a spot Bitcoin and you're worried about, say, the possibility of a DXY blow off top in the next couple of weeks, look at these February 29th, $45,000 calls. They're only $500 right now. And if Bitcoin falls back to, goes back into the range it was in January, like that 40,000 or 38,000, the $44,000 range. These will net you some healthy profits as people kind of rush for downside protection the same way they've been rushing for upside protection this week. So it's always just trying to stay a level ahead of the market and figure out what they're under position for relative to what could happen next. And I think that's probably a good trade for now. So, but yeah, sit on those profits if you got it. Don't gamble it away betting on moves here. We're in a difficult range.
We've got a lot here that we could unpack. I've got some questions, but just in the interest of time, we're going to have to move on to talk more, Benjamin, about Ethereum and positioning. I do want to say, for all those out there, and you do want to get into this, we have some exciting, I can't say news because it's not quite there yet, but behind the scenes, we're working on a new experience where you're going to be able to meet with us, be able to get even more information. More will come on that, but definitely be subscribed to the channel to know when that happens. We're very excited. A lot of work's going into it, but I think it's going to be an amazing experience for those who are looking for sophisticated ways to know the market and to trade the market. And of course, JJ will be there as well as Benjamin and Marconi. Okay, Benjamin, I do want to ask the question from a Ethereum BTC perspective. We talked many times in this show about everyone looking for Ethereum BTC to break down to 0.049 level. And the question I have is, we talked also this episode about capitulation, right? There's many reasons why Ethereum versus BTC has strengthened in terms of so much of Ethereum being staked, around 24% last I looked. And you're starting to have long-term holders for Ethereum, just like you have for Bitcoin. So as we start to see maybe some capitulation events, you mentioned that if Bitcoin holds above 50K on a weekly close, you're going to see some FOMO buying. Do you see people just going directly into Bitcoin? Are they going to try and go further out on the risk curve? Just goes directly into Ethereum, maybe adding some buy pressure there that's going to keep it elevated, and we never really see that wick down to really see the capitulation on ETH BTC.
So as far as I'll come with this from two perspectives. Okay, one perspective is what happens in the Western Hemisphere, and then what happens in the MENA region and APAC. All right, because the total trading behavior or the hodler behavior is very different between these two zones. As far as MENA or APAC is concerned, nobody cares about BTC. The only reason a lot of people were looking into BTC in this time period as well is because of BRC20 in ordinals in China and in Asian regions. It was a huge thing. It was a huge gamble. A lot of speculations happened there. And the next best layer that they go to, if you take up Korea or those Eastern hemispheres, it is mainly Clayton. And then you had the Solana hype. And then everybody has been hoping that there will be a the Ethereum rotation that will happen. And basically Ethereum is sitting on sidelines and like, oh, I'm not in a hurry. I'm just going to wait for everyone to finish it and then I'll do that part.
Patience.
Yeah, absolute patience. But it's very clear Ethereum will once again at least work out as a lagged asset and perform as close as possible to what BTC performs. So if you ask me if Ethereum is going to flip Bitcoin and perform better than ETH's per cyclical performance, I probably won't agree to it because I don't believe that that's going to happen. But at least it will do a similar performance as BTC does when BTC tops out, right? So anyone who probably missed out on BTC, they probably play the lagging trade, which is going to be on Ethereum and Solana and additional L1s. But by default, in this cycle, the behavior has been, oh, well, BTC is running, the market has turned bullish. Let me look at the beta. Mm-hmm. But what is happening is that, like I spoke in previous calls, they're not even looking at ETH as a beta, they're looking at a beta to ETH. Is LDO a beta? Is Ronin a beta? That is the narrative basically that goes on in the APAC region. It's about new tokens and new narratives. If the market is strong enough, let me go and gamble. I don't want to be waiting for a 15% run up in a 3-month period on Bitcoin. I want to have a 15% pump in 4 hours on Ronin, get in and get out and go to the next altcoin wherein there is a narrative. This is basically when it comes to MENA and APAC region. There's very few Bitcoin holders you would find. There will be Bitcoin holders or long-term Ethereum holders, but they're not sitting and trading spot trying to get 15% APY. That's not the crowd you find. Everybody loves yields, but that's not the crowd you'd find in this this rest of the half of the world. BTC, this ETF narrative, is of a huge bonus because of the legitimizing it gets and the access it gets to a lot of this money, which is sitting in USD, in Coinbase, or in a Chase Bank account to get exposure. That is something that is now available for the Western Hemisphere, and they are so excited and they're getting it.
Okay, it's a great breakdown of the difference in trading psychology and really what they're focused on in these various regions. I want to come back and just get sort of a simple view on kind of the original question. So if we're looking just at the APAC region and they're looking at this capitulation moment again, Bitcoin stayed above 50K, maybe a week, maybe 2. It's really showing that it's not looking for a capitulation event. Are you saying then that they're gonna even skip Ethereum and they're going to be going further down the risk chain, just saying, listen, I'm going to get into these betas, a beta. I'm just going to hold that for a little bit to see if I can get that gain?
Yes. They will skip to betas because when I, try to do a bit of gauging with these people, and it's basically, people are already talking about Celestia, Sei, Sui, Aptos, because these are new L1s and they've done already fantastically well over the past year. And it's basically strengthened their trust on some of these chains, even though their TVLs and activities are very low. The narrative is strong. The unlocks are far down the lane over a year later. So it basically makes it comfortable for them to think that, okay, this is just going to keep going up. It's very easy to pump up these tokens. And it's alternative L1s. L1s have always been a successful alternative thesis when it comes to crypto. Like for the past 7 years, we've seen that happen. ETH was an alternative L1. It did fantastically well. Then came Solana. Then came, you had also Cardano. You had all these alternative L1s have always performed well. So people rather look for those type of alternative L1s wherein they have a better chances of doing a 10x rather than parking funds into BTC. So, or ETH for that matter, because a lot of people don't think that ETH will also do a 10x, right? That is what people believe in right now, at least in the APAC side. So shitcoins is where focus continue to go. The moment they think the market is strong, the first question is, okay, I missed out the Bitcoin or Ethereum rally. Which shitcoin should I long? I'm not talking about spot buying. Which shitcoin should I long in order to capture those gains and also make a 2x or a 3x? This is the format of the question itself. That's how they work. That's how they think.
Okay, so for all those asking in the top chat questions about the Ethereum BTC chart, I think there you have it. The psychology is changing a bit. Many of us have been around for several cycles. We're used to sort of an organized view of going from Bitcoin to Ethereum to these other down the stream kind of options for risk. Now what we're seeing is people skipping directly down the stream, going directly into the beta of the betas, maybe even looking into the beta of the beta of the beta. And that's going to change some of this market dynamic. So something to keep in mind as you're starting to position for your marketplace and where you want to be investing. But with that, guys, we're going to wrap up today's show. As we do, I'm looking at the prices here. Bitcoin's trading currently at 48,780. Ethereum at 2,638. 24 hours, we're still positive according to the data I'm looking at on CoinMarketCap. So the pullback here is relatively minor. So for all those out there asking when capitulation event, look for the capitulation on the wrong side, for people to be going up, not down, and for people to be buying up price insensitive because they just can't stand to be on the sides anymore. All right, JJ, Benjamin, love having you guys here. Can't wait to have you back in the studio. For all those out there, be sure to tune in every Tuesday, Thursday. Love to have you back. And keep the questions coming. We'd love to hear what you thought of Benjamin's mic. He invested big time on it. I'm going to let it go. All right. This is Marconi White with the PSA. Keep some dry powder. Signing off.